This trade right here on Euro USD made me just over $5,000 this week trading using a simple strategy. And in this video, I'm not only going to be breaking down the full system that I personally use, but I'm also going to be going into more detail about the risk management systems I use to trade both prop firms and live accounts by breaking down this trade. Later in the video as well, I'm going to be showing you guys how you can apply the same system to make money even when you are wrong about market direction using a second trade case study on Euro AUD. But first guys, here's quick proof that we did actually take the trade. You can see here this was the Euro USD sell, just over $5,000. And then also this trade was not only taken by myself, but it was taken by over 100 people in our daily live call, which we have every single morning, Monday to Friday. So before we get into the trade breakdown, let me put up a clip of this call so I can show you guys that I did actually forecast this trade beforehand, and this is not just in hindsight, just to provide you guys with some extra proof because there is a lot of nonsense in the trading space. So I'll play that now. It's currently running around 1.5R, so hopefully we can see it continue off into these lows. I think at the very least we could see Asia low taken out. I didn't really see anything stopping it from getting there. But yeah, essentially that's the thought process behind EU. And then going forward, I'm just looking for price essentially. If we zoom back out to daily time frame, just looking for price to gravitate back towards that. Right guys, so thank you for joining me here on the charts. What we'll do is we will start from a completely blank chart, and as with all of my trades, this one originated on daily time frame, and I started with this higher time frame analysis and broke my way down to the M5 time frame for execution. So we'll get into higher time frame first of all. So here on the daily chart, right, technically price was overall in this bullish trend. It was still respecting bullish market structure. You can see right here we have this daily breaker structure. Price had come down, reacted and held this area of daily demand, right? But overall, very recently, we've seen kind of this very bearish structure on lower time frame. And what I was anticipating here is that even though this was overall in this bullish trend, it was very weak lower time frame, and you can see all of this momentum coming in. And on top of that, it wasn't really reacting from anything significant to the left. One of the things that I always try to emphasize to the guys inside VIP is that price is not normally going to reverse unless it's taken out some significant liquidity or tapped into an area of supply or demand. So one of the extra confluences I like to use when having a look at higher time frame bias and direction is having a look at what price is reacting to the left. If it hasn't swept major liquidity, for example, like it did back here, it's very unlikely to reverse, which kind of can help you in determining your directional bias because you know that price is very likely to gravitate towards these areas. In this case, we had this previous low right here, which was the last bit of liquidity before this imbalance. So what I was thinking with this trade is that if price is going to flip back bullish and continue with this overall trend, it's probably at least going to take out this previous low first of all. And if we jump over to the lower time frames, and this is where kind of that bearish bias came into play. So overall, you can see since end of September, price has been presenting this very clear bearish structure, right? We had, if we just mark on some of the most recent breaks of structure, we had this one right here on 4 hour. Price then once again at the end of last week retraced, created a new low. So this was the next break of structure, right? And what I was thinking with this trade is if we just pay attention here to how price came up, it came up, notice how it wicks this liquidity, fails to close higher and break above this high, and then continues down, kind of engineering all this liquidity below and creating this very kind of textbook looking retail support level. So what I had marked on at the time was that price had grabbed these highs, right? And price had then sold off towards the previous lows. Now, once it came into these previous lows, notice how it starts to pull back here just in Asia session prior to London Open. So when I saw this, my thought process at the time was, we're overall in this bearish structure and price is still respecting this bearish trend. It's wicked out the liquidity. We've seen that sell off towards the previous lows. It's engineered all of this liquidity below and it's kind of reacted from this support level, which just looks a bit too obvious. Obviously, if you were buying from this support, it's kind of like just buying at a low in a downtrend, which obviously you don't want to do. So what I was thinking with this is that this was likely just going to be a retracement for price to continue lower. In terms of my actual point of interest on this trade, it was this area of hourly supply. You can see here kind of like this bullish candle where we had this pause in the market before price continued to sell off. In or prior to London Open, we also had price sweep in this area of liquidity. And once again, one thing I want to emphasize here, and one of the things I like to tell the guys inside VIP, is that you could easily have viewed this as a change of character, right? Because technically price did create a higher high. It was overall downtrending, and this was technically a higher high. But one thing with changes of character is that you have to also be aware of overall market direction, right? So if, like, for example, price is bearish like this and it's reacted from the low, is this likely to be a change of character, or is it more likely just going to be a sweep of some previous highs for price to head lower, right? In this particular case, obviously, because we are overall in that bearish trend, it's more likely that this is just a sweep of previous highs for price to continue down, right? So once I saw price come into this area of supply, this was around London Open, I went over to the M5 chart, and I also noticed here that price had wicked out Asia high just here, right? Notice how it fails to close above, wicks down, quite a lot of bearish momentum coming in. So as always, I'm always using the M5 time frame for my entries on every single trade. I don't go down to the M3 or the M1. I'm only ever using the M5, and all I'm simply waiting for is a change of character plus some imbalance for price to create. And in this particular case, if we play price on one more candle, you can see right here, as opposed to before where it came up with this very clear bullish structure, right, creating higher highs and higher lows. Once it got to this point, we had price wick above the high and then create a lower low, right? So the M5 has now shifted into that bearish structure, which we wanted to see to confirm that this area of supply was likely to hold and price was likely to head over to the downside. Also notice that in this case, significantly, it has taken out some previous highs in the market. If it had given a change of character before taking out this high, I would not have viewed this as a change of character, and I would not have been looking to sell. The liquidity being taken out into the supply basically just increases the chance that price is likely to give this reaction to the downside. So in this case, all I was looking for in terms of confirmation was for price to create a lower low, which it did. If we rewind price one candle as well, the other confluence that I needed to see for an entry to be valid was for price to create imbalance, which you can see it did right here, leaving this area of supply. So that is exactly where I set my entry, just on here, with stops above the high, a little bit like this. My thought process with this stop loss as well was that if price came above this high, I don't really want to be in the sells anymore because, you know, price is likely just going to head higher. So I had the stop loss in a logical place just above the high. I will never have the stop loss, by the way, just above the supply zone because, you know, it doesn't really make sense to do that because price could easily wick out the supply zone and our trade would still be valid. The trade is only invalidated if it comes above this high. So that's why I've positioned my stop loss. And then, as you guys would probably know, on all of my trades, I use a mechanical 1 to 3 risk to reward. So I very simply dragged the risk to reward to a 1 to 3. In this case, this aligned quite nicely just below the Asia low as well, which is this yellow box for anybody that doesn't know. And that's literally all there was to this trade. And as you guys can see, this one tagged us in and it literally took about 90 minutes to play out. So overall, a very great trade. One other lesson that we can take away from this trade as well is, and this is recently why I've switched to that mechanical 1 to 3 risk reward approach, is because it prevents you from being greedy and it prevents you from making stupid mistakes. Like, for example, with this one, if I had targeted this previous low, because I was being greedy, right? Price eventually then reversed on us, as you guys can see. Even though it did look like it was going to take that low, it created these equal lows, right? Even though it looked like it was going to take that low, it reversed from the area. So if I had been greedy on this trade and held it for a bit longer, it would have came back up, stopped us out for either break even or stop loss. I don't personally use break even, so this would have been a stop loss. So yeah, that's just a massive game changer in my opinion, and it has been for myself, which is using that mechanical 1 to 3 risk to reward because it helps to eliminate any of these mistakes that you can make, such as, you know, being greedy and just holding trades for longer than you should. And it also takes away any kind of uncertainty in terms of where you could target, because one of the things I notice a lot with particularly this SMC/ICT approach is that there's an infinite number of targets that you could possibly go for. You know, you could go for this low. There was probably some imbalance to the left or a higher time frame demand. You could have also targeted that. So it's just kind of like a massive relief if you know on every single trade before you get into the trade that you're just going to mechanically target a 1 to 3. A 1 to 3, by the way, was the optimal risk to reward, which I tested. I tested literally every risk to reward all the way up to a 1 to 10. 1 to 3 was the one that which produced the most profit. That's why I use a 1 to 3, so it's not just some random number plucked out of thin air. But yeah, guys, that was essentially everything that went into this trade. Very simple trade, rinse and repeat in the same thing on every single one of my trades. I always use this exact same strategy, and that's literally all there was to it. Now, guys, as I said in the introduction, sometimes I'm wrong about overall market direction, but can still make money using this system. And this EA trade that I forecasted earlier in the week is a perfect example of how this actually works. So you might be thinking, how can you make money if you're wrong about market structure and direction? Well, this trade perfectly demonstrates it, because you can see that price eventually did continue lower and we were wrong about market structure and direction. So this is exactly how this strategy works to catch trades like this, even when we're wrong. And guys, just so you can see that this wasn't just cherry picked in hindsight, you can see here we did call this trade beforehand. This was the analysis yesterday evening. As you guys can see, this is the trade we were looking at. Now, getting into the trade breakdown and why I was actually looking to take this trade, you can see here on Euro AUD, if we start off once again on daily time frame, work our way down to the M5 for execution, you can see that very recently we've had this breaker structure right here. Once we saw this, we saw price come back down, completely fill in this imbalance, and then start to react off this area of demand right here. Once it did so, we then saw price shift back bullish on daily time frame. It went from this downtrending structure internally to presenting a higher high right here and creating a change of character. Very recently, we've had this price action, which is slightly harder to read and is a little bit messier, to be honest. But what we've seen is price come down, grab these previous lows. We had an initial reaction to the upside just here, but then price came back down, grabbed the low once again, and that's when we saw this kind of momentum coming in last Friday. And significantly as well, we did see price close above this structure point right here, which was a change of character, right? Because price went from this kind of retracement phase where we were printing lower lows and lower highs. At this point though, it created a higher high and went over to the upside. So that's how I was viewing price here. Now, if we take a look at the 4-hour chart and where price was at the time, it was around this point yesterday evening. So you can see that once we had this change of character, price retraced earlier into the week, kind of filling in most of this imbalance. It didn't quite fill all of it, but you can see it very clearly retraced, filling a significant amount of it, then started to react and push up towards these previous highs. So at this point, I was looking for price to react to this high, engineer some liquidity above, retrace, and then look for buys to capitalize on a buy up into these previous highs. Now, in terms of where I was looking to actually buy from, what I noticed here was that if we take a look at this price action, you can see that on hourly time frame, it reacted from this kind of partial imbalance fill, creating a change of character right here. So it had flipped bullish already, but what we can see here is that there wasn't really a clear point of interest in this range. It was just this imbalance. So the only thing that I was thinking price may want to react from is this last bit of liquidity here, which was the last bit of liquidity leading into this imbalance. And like I said, there wasn't really anything else that price was likely to react from. So once this was taken out, we then saw price start to shift back bullish, right? We had this M5 change of character right here. One of the rules that I always follow is a wick above the structure is not actually enough for me. I need to see a closure above this line right here. So if we play price on a little bit, you can see that eventually it did end up closing above that structure just here, right? Once we had that body closure above the structure, I was then looking between the low and the current high for an area of demand where I could potentially enter from. In this particular case, we had this one right here, which you can see price induced several times. So in terms of this trade, the trade would have looked like this. I didn't take this one because I had already taken that Euro USD win earlier in the day. One of the rules I have in my trading plan is that if I do take a win on one day, I'm not entering any more trades. Same with the loss. If I take a loss, I'm not entering any more trades on that same day. So this would have been the trade. You guys saw I forecasted it beforehand, but I stuck to my trading rules and I didn't take this. And as you guys can see, this trade eventually did play out. And significantly as well, the thing I wanted to emphasize with this second trade case study was that I was actually wrong about market direction. Price did eventually continue lower, as you guys can see. But because we emphasized this approach of liquidity and focused on where price was, where the liquidity was, we still managed to capitalize on a reaction. And this is significant because it means that even if we are wrong about market structure and direction, if we focus on liquidity, we can kind of predict where price is likely to at least give a reaction from. And because we're combining that with lower time frame entries and confirmations, we can still look to get in, capitalize on our 1 to 3, and then be out of the trade if it is going to reverse. If it rallies to the highs, good, but we don't really care because we're out at 1 to 3 anyway. So all we're looking for price to do here is we're not looking to forecast the direction going forward longer into the future. We're just very simply looking to identify where price is likely to react and bounce from. And just having that perspective and lens through which you view price has been a massive game changer for myself, because it means that you don't have to be too caught up about where price is going to head next week or tomorrow. You can just focus on where price is likely to react from, focusing on liquidity, obviously still combining that with higher time frame direction. But it doesn't really matter if you're wrong, because you can still look to capitalize on these small reactions, right? And as I said, guys, this Euro USD trade was called in one of our live morning calls, which we have every single day, Monday to Friday. We also do live back testing every Saturday as well. So if you want to partake in these daily live calls, I'll drop the link in the description below. If you want to see more trade examples of how this strategy actually works, I recently back tested gold over an entire year's worth of price action. So there's plenty of trade examples in that video and in those series of videos, which I'll pop the playlist somewhere up here on the screen. If you guys enjoyed the video, make sure to like and subscribe, and I will catch you in the next one.